Well, good morning, everyone. It's almost a minute to 10. Thank you very much for joining us this morning for the talk on wheat marketing. We're glad that you've joined us in this webinar today. We have Jack Davis, our field specialist, that will be talking about wheat marketing. Jack has been with SDSU Extension for over 27 years, so great experience. And he's also a farmer in Central South Dakota. So Jack has a great experience, and I'm glad that markets, grain commodity markets are really doing well. So I hope he has good news for us. And so we're glad that he will be giving us that talk. In any time, you can type a question or in the chat box or in the Q&A area. Then we also have an extended time for discussions after the talk. So with that, I'll hand over to Jack.
Okay, we'll pull up the presentation and get started. So just contact information. We're going to do a few different things. We'll look at options, just some pricing and things to know on options. And I just used a corn example to start, and then we'll take a look at wheat. And at the end, then kind of some moving averages for the corn, soybeans, and wheat on some chart stuff. So that's what we'll try and work through today. So I want to show just a couple different things here on options. There was talk in one of the last ones of selling the crop and re-owning, so that we had possibly missed out or sold too early. And just wanted to point out a few things. You can do that, and there are ways to do it, but I would really want to have a good advisor or be really studied up on it. But I wanted to show just a couple things, and one of them is what I got circled there, the implied volatility. And when the underlying market becomes risky or volatile, that goes up, and that is a method of pricing options. So options go up in price when the underlying contract has more risk and or more time, so that implied volatility becomes higher, and then of course the price of the option becomes much higher. In calm times, when we kind of know what grain's gonna do, we have good ending stocks positions on the balance sheet, that implied volatility for grains will run 20 to probably 25%. So it is up quite a bit right now, which just makes sense. Our ending stocks are lower. We don't know drought-wise. We don't know COVID-wise. So just a lot of unknown and higher price levels making that go up. So I think we're right in at that. Here's our strike price. We're right in that 530, 520 area. And you can see that the last price on those options were anywhere from almost 50 cents to 55 cents. And the other thing I wanted to point out was what's called the delta. And just in simple terms, without getting real technical, this is how much. So for the underlying contract, if it moves 10 cents, and we'll just use this one, this 531, this option price would move 5 cents. So in rough terms or rough explanation, it is the amount that the underlying option will move in its price. So they're not going to move one-to-one with its contract. So just something to think. And this changes the more time we have left on it, or the less time we have left on it, and it does change. But if a person was thinking they'd sell 5,000 bushel, wanted to re-own it in an option, well, it's not going to move the same as as the individual bushels or a futures contract. So just a couple things I wanted to point out today. Some of these slides are going to use a metric ton and some will use a bushel. And also on the larger amounts, world amounts, they use a million metric ton. So I just wanted to remind people, be careful when looking at the charts, and there's our conversion factor. So a metric ton equals almost 37 bushel. So we'll still go back to the WASDE report, which is starting to get a little bit old, but anyway, the big thing, ending stocks in the U.S. Down quite a bit, but still not near like we are in the corn and soybeans. So it's moving in the right direction, and we've seen good price rises, but not near the story that we have in, like I said, in the corn and soybeans. And there's the all wheat prices, which is most of the wheat price that's quoted, and that was what was back on the other one, previous slide. The big story, most of that movement or decrease has come in the hard red winter wheat. And that's even worldwide is a hard wheat that has is doing most of the movement, most of the reduction. The other types of wheats are pretty steady on their ending stocks, as we can see here. The bottom line is what was shown in the December report. The second line up is the January. So a little bit of decrease in hard red spring, a little more in the red, but the white, the durum, pretty even. And again, most of it coming in the hard red winter wheat. And part of that went to seed, as we'll see going forward. We had about, I'm thinking it'll show us that about 1 million bushel went to seed. We had a 5% rise after trending lower in recent years, but that's still quite a bit below acres that we've had previous. So we're only at, I think, around 32 million acres of winter wheat seeded. So just looking at U.S. wheat ending stocks by their different classes. And here again, showing that same thing. This one is in million metric tons, so you'd have to convert that to bushels. But just showing how much we're off in that hard red winter wheat. And this is the U.S. And here's the different years going back to 15, 16. So we're back to below those levels for ending stocks. And as we see in the hard red spring, we're pretty even. Soft red, a little bit lower, and white and durum fairly even. Ending stocks is our blue line, and we're right at 843 or 38. We'll see the number here coming up. I don't have all the numbers memorized. So the blue line ending stocks, and of course, as ending stocks go down, price tends to go up. And that's a seasonal average farm price estimate of 483 for all wheat. Just a chart showing our top 10 customers that take wheat from us. And as we can see in 2019-20 crop year, China took very little, but have come in at the beginning of this year's or for this year crop and picked up quite a bit. So switching to world, and all of these then will be on million metric tons. So even though we're down in the US, our ending stocks is on a world level is expected to go up by 13 million metric ton. So, more so maybe than, I see somebody maybe has a question. I don't know if you guys can help me with that. I can sure take it.
No question yet.
Oh, okay. It said somebody raised their hand. Maybe that's an accident. So they'd have to type if they want to answer or have a question right now. Is that am I understanding that right?
Yes, they can type a question anytime.
Yep. Yeah. Somebody might have been playing with the Zoom and just raised their hand. It popped up on my screen, so no problem. So yeah, still going up. Wheat, we just don't have the influence, and it's grown in so many places that it's going to take troubles in a production standpoint in more than one place, at probably a minimum of 2 regions and possibly 3 regions in order to have a real large impact in its price. Although what has happened is that the U.S. and then there's some instances maybe with what Russia's going to do with their exports. We did see it drop here recently, and part of that was China took some of their inventory and allowed that for sale in the country. So they loosened that up, trying to ease the demand for corn, use it for feed within the country. So that was some of that drop here a week or so ago. Yeah, and we're seeing global, this is a percent global stocks to use. It just, it's going up. So need that trend going the other way for prices to take off. Whereas we see on the corn and beans, it is going the other direction, where that's going down and our prices are going up. Just taking China out of the mix, really the same story, just that they have a little over half of the wheat. So just wanted to show, I know we got a lot going on in this slide, but just want to show the supplies that are available by the top exporting countries. And as it says down here, it's a beginning stocks plus production minus what they use in country. So as you see, there's a lot of countries that export wheat. So we need if there's a problem in one area, it's fairly easy for some of the other areas that are having good growing conditions or a good crop to be able to ship their wheat. Therefore, we just don't see the reaction when we have, as we do, similar to our corn and beans. World ending stocks, just wanted to show a picture of that, where it is. Most of it in China, or let's say half. The other is all those other countries, Black Sea region, Russia, Ukraine, that area. And then our top 5. So just to add some to that, Australia was up about 2.5 million metric tons. Argentina was down about 500,000 metric ton. European Union was down about 3.2 million metric ton. And Russia, or the Black Sea is up about 5.3 million metric ton, and the US down about 6.8 million metric ton. So just kind of giving you an idea of where it is and how one will increase and the others end up decrease. Just global ending stocks to use. Again, this is given in million metric ton versus bushel. But as you see, it went up. Our prices come up because we have had some problems, but also other grains helping pull the wheat up. And this is a hard red winter wheat price that translates to, I think, around $6.65 a bushel. So just really summarizing our U.S. wheat, the September through November disappearance came in at 512 million bushel. Our December 1st ending stocks was 9% below what it was last year. And the feed and residual use was raised 25 million bushel up to 125 million bushel. The seed, which most of it was for winter wheat acres, we saw a 5% increase in the winter wheat acres. That was 1 million bushel. So it ended up in a 26 million bushel decrease in ending stocks. And our total ending stocks for all wheat, 836 million bushel, 19% below last year. So pretty good drop. Market year average price was increased 15 cents to $4.85. And again, that's all wheat price. So everything is combined when that's reported that way. Just a graph of wheat at Dodge City, Kansas. The cash price average for 2015 to 19 are red line. So we can see 4.25, maybe not quite up to 4.50, and a lot down below that $4 mark in a 5-year average. 20 was a little better, and of course 21 we're starting out pretty good, right above that $5.50 to $6 range. So just pulled a long-term chart, so monthly nearby for 10 years, and then no science. I just picked a bottom in here and drew it across. That's at 603, which was kind of at the bottom of our rally back in 12. We came back down in 14 and again back up. And then kind of hung around there 14 and 15 in the middle of that. So that's why I just picked that bottom there, or possibly support line. Then just pick the middle of this time frame, or where it was for price, and that's, you could call 7 to 7.25. And then on the upper end, just came and picked a line across there at 8. So just to kind of give a perspective of where it's been over the last 10 years. But sometimes I think when we get up above that $6 level and we say, man, it's going to go, crazy. Well, it could, but yet we may want to also take advantage of some of those opportunities that are presented if we have the crop. So this is hard red wheat, September futures. So the crop we're growing now, and I just took and placed in some moving averages. The green line is a 50-day moving average, and the red line is a 100-day. So I think still, even though we dropped here last week, we're still really probably uptrending. We haven't crossed over. Our faster moving line hasn't crossed over our slower moving average. And when that happens, that would possibly signal a change in trend. So really probably still trending up as our faster or 50-day moving average is above our slower moving average. Well, it doesn't want to go for me. It'll go. Hang on. Sorry, guys. I don't know why my PowerPoint is not moving. I'm going to hit an escape. Just click him here. So doing the same thing with a 50-day being the green line, hopefully you can see that that's green, and in the red line of being the 100-day and off of the close for a moving average. This is the July contract. No, I'm sorry, I misspoke there. This is a March contract. So just wanted to show here where we crossed over, and we're still really trending up. Here's the December contract. Same thing. We came down, tested that 50, and we're back up again. Very large exports announced yesterday and this morning. I think when we talked corn, our ending stocks was right at 1.5 or 1.8. If that all gets shipped, which as of right now, much of the grain is on track and being shipped, the sales aren't being canceled. It is being put on the boats and being delivered. That would take our ending stocks down to 1.2 if all of that actually gets delivered and out of the US. So that's starting to drop us. I think we were at what, 10.6 or 11.6 for ending stocks to use. That's putting us down around 8% for ending stocks to use. And that makes it any weather problems in the US will have a larger impact. Now, those positive things for price being said, where we could be limited because ethanol is not in the position that it was, 6-8 years ago when we had our large ethanol run up. But it is strong demand out there for feed in that use. So it could get very exciting going through into our growing season. Looking at March soybeans, same type of story. We will probably have these setbacks. We have a large volume of speculators in managed funds. So as they see a chance to take profits, we will see those setbacks. But our trend has not changed. Those little corrections are okay. That allows end users to get in and fulfill their needs and actually get the crop bought. So there's the March contract is showing, and then the November. And again, I just picked a 50 and 100-day moving average. Just wanted to show the change in world consumption. Just a really positive note grain wise. So this is 30 years of world consumption, just our trend line. And the blue is the wheat. And as we see, wheat it has to have a supply problem. It's not, it's growing, but not near to the pace of corn, and definitely not to the pace of soybean growth in consumption. And as we're produced wheat in almost all of the world, it's really tough to get maybe those surprises production wise. It has to be in more than one of the growing areas, and probably more than two. But almost a 240% increase in 30 years in soybean use. Like, it just tells of our world growth and the demand for more protein. That's what I have for today. Again, I think still the same things apply as when we started out a few weeks ago. There's opportunities for profit. I think just know your costs. Be careful in pricing. Make sure you know what you're doing, and have those lined up. If you have crop left, great, and don't hang on to it too long that you don't sell it for these good prices. And then let's get to work on pricing this next year crop that we're going to grow. That's what I have.
Thanks a lot, Jack, for that presentation. There are a few questions in the chat. I don't know if you're able to see them, or I could read them for you.
What were ending stocks to use for corn in 12? They got down around, I want to say that 5 or 6 without looking it up. Okay. As I talked, when we get to 10 or below 10, things become much more interesting. And just as we go down, you get 8 and 7, then we're really starting to get short, and it'll get what should I say, volatile. We'll have much more reaction to drought situations in the U.S. or problems with our crop, and even at levels that we're at now. So we've gone from last August really to ending stocks position or projected position that was in the mid to upper level of ending stocks to use, now down to a lower ending stocks to use in a very short time frame. And that's happened for both corn and beans. Beans is tighter yet. But yeah, so there is, from that standpoint, upside potential for corn. Oh, I had not heard that on the. It's asking about the CFAP program being on hold. I'm not sure. I'm guessing they're as we get a new administration, probably want to work through that, and possibly things that they want to do with aid, or if they want to change it, that type of thing. So that would, without hearing.
So Jack, for the people who may not know what CFAP is, would you mind explaining a little bit of that?
Yeah. I've used the acronym so much it just left me. Corona food, right? Aid program, farm aid program. Coronavirus farm aid program. So it was really put in place, yep, to help with the drop in the market. And we've had now a couple rounds of it.
Okay. Other questions or comments? So today we have a lot of time to have a continued discussion. So feel free to type in the chat or ask any question that you may have on wheat marketing or marketing of any other commodities that Jack would help us answer. So we'll continue the discussion session. Everyone should have an opportunity to unmute themselves and ask a question or type in still in the chat box any questions you may have. There is a poll that's showing on the screen at this time. Please help us respond so we can know how best to reach to you with the information that we have. These polls are very helpful in helping us know how you feel about the information we present. And related to that, we'll also send in the email a brief survey, again, trying to assess the information that we're sharing with you, knowing from you the best way to reach out to you and how to package this information for future meetings. So this is really important for us to kind of know what works best for you. So we appreciate you participating in these surveys and polls. So again, any questions that you may have, please type them up in the chat box. And here soon, everyone will be promoted to be a panelist, so you can have an opportunity to unmute or be on camera and ask a question, or type it in the chat box for any questions you may have. So Jack, I have a question for you. I mean, like wheat prices are looking really good at this moment, and you may have covered this question, but just in case I missed it, what do you feel to be the continued trajectory? I mean, do you see, prices probably going into $6 range for the next crop, or what's likely to happen?
Yeah, I would think in that close to that $6 range. Now we had that for USDA's is at 485, but I would say we'd be real close to that on a futures side. So in that area, and part of it's going to see what happens with things in other growing areas. So again, the other grains are going to pull it along, but for wheat to react on its own, it still needs growing issues in probably another area.
Okay.
And like the bad dog, we hope that's somewhere else besides here.
Right.
Right.
Yep. And I think there are talks of, the effects of the drought at the moment, that we seem to be low on soil moisture. So I wonder what that might impact our crop going forward.
Yeah, and we'll have to see weather-wise, have they picked up a lot of moisture in the south? And now there's talk of the cold coming down. And if we're, like you say, if we're bare up here and dry up here, that may not be good for wheat.
Yep, I was seeing yesterday an update from Laura Edwards on the drought monitor for the state. Almost the entire state has some level of drought stress. So yeah, so that would definitely affect crop performance.
Yeah. Now I know last week Nebraska got some snow. I don't know how widespread that was, and then I'm not sure down into Kansas and that area where there's more wheat grown.